Oh!
There he is.
Oh! Oh!
Oh, bada bing.
Hey, everybody, welcome back to the JC and Sean Options Show. You like that, Sean? The JC and Sean Options Show?
The new title? I like it.
I don't know. I think we need a better name for that. But it's Wednesday. We have our team analyst meetings on Wednesday mornings. And, a lot of times there's an interesting trade that comes about. Sometimes there isn't. But there was today. And I don't know if there's anything that makes me happier than Sean getting excited about commodity futures. That's something that doesn't happen very often, Shawnee.
Well, we were kicking around some different ideas, and we had some ideas on the table that, I was lukewarm on. I thought they could work, but they didn't get me excited. And then all of a sudden, Ian from the bleachers just lobs a home run ball back into the field and says, "Hey, what about commodities? What about wheat? Have you seen what's going on in wheat?" And then here we are. And he's right. I mean, this chart that you got here up on the screen, unfortunately, is stale. You're missing a day. You're missing today, which is the most important day, because wheat definitely traded up above that little resistance line you got there, that dotted blue line, popped up near $9, breaking above that level, and that's got Ian excited. And if Ian's excited, boy, Ian doesn't get too excited about much, but when he's excited, I noticed that.
Wheat's up 2% on the day, off the highs, but still up 2% on the day. Keep it simple. It's by the 10 strike, going out all the way to January, which is something that I like, because it's like, it broke out today, then gave some back. Like, fine, let it dance. We got till January.
Yeah. We gave it some time. We got 4 months or so for this to work, and we bought the January 10 calls. So we paid 55 cents. I think right now you can maybe even get them for 50, somewhere in the 50-55 area. It hasn't moved that much. But look, JC, we got what sets up here is a, low risk potential for high reward trade, right? I mean, if we paid 55 cents for it, that's the absolute most we could lose in a worst case scenario, which, is manageable. But if we starts going back higher here, and even if it just gets stuck in that range that it was stuck in earlier in the year, from like that 10 to 12 or that 11 to $12 range, even if it gets stuck there, we could look at a possible 4x on our investment here. And that's, risking, let's say we're risking 30 cents on this trade and we can make, 4 times our money. That's a pretty good setup. That's what I'm looking at, JC. I don't want to hold, if this trade isn't working, I don't want to hold these calls all the way to zero. That's not my goal. My stop loss level on this trade is 780. So if wheat trades and closes below 780, that's going to tell me that I'm wrong. It doesn't show up there in your chart, but 780 kind of corresponds with the low there of the last few weeks.
A couple of things. First of all, I was incredibly surprised that this particular ETF traded so much volume. Traditionally, the Tecrium, there hasn't been a lot of volume. CORN, corn, soybeans, SOYB. Maybe I missed it. Maybe they've been trading more volume for a while. It just hasn't. It's been something that in my head was the case. And then when I looked at the volume and I was seeing 2-3 million shares traded a day, wow, huge volume. I'm not quite sure if it was like that before the Ukraine war, or if maybe that sparked more interest in wheat. If you're out there listening, I got to go back and check just off the top of my head. So surprised at the liquidity. So that's not an obstacle at all. I thought it was prior. So that's really interesting. Number two, in a high volatility environment with the VIX currently in the mid to high 20s where it's been traditionally, that's high. To go out and buy calls at first glance might not make the most sense, right? We want to be selling premium. And then a couple of things. Number one, you told me yourself, JC, we've sold enough premium. We're in that. We're in that trade. So fine, fair. And you want to know what else is that we're buying calls in wheat, which is not the S&P 500 or Apple or Peloton, right? Or Facebook. It's not any of those things. It's like this other commodity with much less or no correlation whatsoever with the equities market. I love the diversification of it. I like the fixed risk. The world can end tomorrow. We can cause cancer starting tomorrow, and it's okay. We're not going to lose more than 55 cents, right?
Right.
Like,
Well,
I like so that's where my head is at. How do you feel about my train of thought there?
no, I think it's great, and you mentioned it like in our call. I think you and I were both surprised when Ian recommended wheat and corn. We're like, those things trade, and then we all looked at it up together, and we were wow, surprised. And to add some further color to what you were guessing at, and I think you're right. I'm looking at the wheat just like at the common stock, the ETF, and the volumes were anemic until mid-February, and now all of a sudden we've got real volume in the actual ETF. So definitely this is Ukraine situation related, and that's definitely driven the volumes in the options. But what's nice about the options is, and again, we were totally surprised, the open interest, we're looking at 10K, 20K open interest at each strike level just out of the money in October. Didn't expect that. And the bid ask spreads were tight. We're talking 5 cents wide. So there's plenty of liquidity there. There's plenty of open interest, easy to get fills. So that's why we like to trade. And, you know, in the off chance that if volumes dry up in this trade while we're in it, well, at least we made our life easier. We just bought calls. We didn't do any multi-leg spread that will be hard to trade out of. Look, we bought the calls. Worst case scenario, we take a 0 on them. That would suck, but we're sizing our position in such a way that if we were to lose everything, it's no big deal. And that's how you have to do it.
Yeah, listen, if we can salvage some if we're wrong, great. If not, that's okay too. We're going in there knowing that that's the worst case scenario, and we're accepting that before. So as far as I'm concerned, I already wrote the check. It's gone. And we might wake up one morning and we've got a 10-bagger on our hands. That happens too. So, or maybe a 2 or 3-bagger, whatever. Either way, all good. So, ladies and gentlemen, we are buying the January 10 strike for the Tecrium Wheat ETF, WEAT, January 10s, about 50, 55 cents. Makes a lot of sense. Makes a lot of sense to me. Win, lose, or draw, I'd put this trade on 10 times out of 10.
I love it. And, you know, you and I don't talk about fundamentals a whole lot, but I mean, look, the technicals are lining up with a pretty good fundamental macro picture here, right? I mean, we got inflation that people are worried about. We got the war that people are worried about. All of these things that are going to potentially drive the price up. Not that we care, but hey, it's nice to know we got that wind in our sails.
I'm impressed. This is a good example. My grandmother is very concerned, about her grandchildren, as you can imagine. And so she asked me, like she hears all these things, inflation, elections, the war. So she worries about me and my business and everything. And then she's like, how are you guys doing? And I'm like, crushing it, abuela, we're doing great. She's like, but I don't understand how. And I explained to her, in certain situations, there are beneficiaries of certain things and some people get hurt, some people win. It's a great example. This has nothing to do, this company, Tecrium, has nothing to do with Russia, has nothing to do with politics. It just so happened that years back, they created a wheat ETF and there happens to be a wheat shortage. So everybody runs. So this is a perfect example of just randomly a huge winner out of this whole war scenario. And this happens constantly. So, there's always good things that come out of bad for certain people. It's fascinating to watch. It's just a great example.
Yep. Well, hey, we hope it works out for us. And we like our chances here, and we've got a limited risk play here with a potential to 4 or 5x our money if we get it right. So we'll do those trades. As you said, we'll do those trades all day long.
Shawnee, you and me are doing this live next week, are we not? We should do this from California. Sean and I are going to be in Huntington Beach. If you are coming out for the Future Proof Conference, come say what's up. Let's grab a beer, maybe some Vietnamese food, maybe both. Shawnee and I will both be there at Future Proof Huntington from Sunday, September the 11th until Wednesday, the 14th.
Yeah, right. I'm looking forward to it. I can't wait.
All right, week calls. Hopefully we're already in the money by then. See what I did there? In the money. All right, guys. Adios.
See ya.